At yesterday's launch, the Coalition announced one of its big-ticket policies for this campaign, a $500 million first home loan deposit scheme aimed to help get first home buyers into the market. Housing policy has been in the spotlight in this campaign, with major concerns over Labor's negative gearing changes. Now, statistics tell us, despite all the rhetoric, that owning an investment property is a key financial strategy for middle Australia, and that it's those on more modest incomes that see this as a way to get ahead and provide for their retirement. In recent days, a Liberal Senator for the ACT and Assistant Minister for Treasury and Finance, Seselja, has been holding a series of forums around the country, Canberra and elsewhere. He joins me now to give us some feedback on housing issues, and of course I want to ask him about franking credits as well. Great to have your time, Senator.
Thanks, Peter.
You were outside of Canberra. You were down in the key seat of Indi, which for people at home is in and around the sort of Wangaratta area. That is what I would regard in terms of income, middle Australia. How is this issue of housing playing out?
Well, we've been all around the country actually, and so in Indi, in Deakin, in Petrie, in Ford, over in the west, in Pearce and in Boothby and Adelaide, as well as Banks in Sydney. So all of the capitals, and what we're hearing is a similar story, that people are concerned about the loss of value of their home, whether they're an investor or whether they're just a homeowner, owner-occupier, because all of the key analysts have said it'll drop prices. SQM says on average about $70,000 for the average home, $127,000 in Sydney, $100,000 in Melbourne. I mean, that's a big loss of wealth for people, and most Australians, their wealth is a little bit in their super, or some in their super and in their home, and some have an investment property. But either way, they feel they're going to cop it. And we've been hearing from a lot of experts in the field, a lot of people concerned about the loss of value, the big increase in rents, and the broader impacts on the construction industry, which we believe, and certainly the NBA and the HIA and many others believe, this housing tax would cost thousands of jobs in that industry.
So when they started the policy, Labor put this policy on the table, I think people looked at the issue of an investment property and thought, well, I don't have one, so it doesn't really apply to me.
Correct.
Now, we'll get into the stats in a moment because lots of Australians do, but for those who didn't, they thought, well, OK, you know, maybe it does seem a bit unfair that there's a tax break for people who have a second investment property or a second home. I don't, so I'm OK. Now they understand it's going to hit the value of their home if that's all they own. Now, for most Australians, their home is their insurance policy. If, God forbid, something happens inside their family, if something was to go wrong, if they were, you know, losing income coming into the home, they know they can sell their home, take away whatever capital they've got and downsize if needed. If their home was to devalue through no fault of their own, that worries most people, because there's nothing they can do about it other than vote a different way on Saturday.
Well, that's exactly right. So, you know, if you've got $100,000 equity in your home, $200,000 equity in your home, and suddenly it drops, or if you've bought just in the last couple of years and you face the prospect of negative equity, remember, this policy is designed to drop the value of property. I mean, that is the stated aim. That is the stated aim.
If you want people to get in at cheaper prices for homes, then the current home values have to come down.
Yeah, now Labor's changed their rhetoric, but they said very clearly they wanted to put downward pressure on prices. Now, that was when prices were going up. Prices have come off and in some places have been going down. If you're putting downward pressure, what's that going to do? It's going to further drop the prices. And so those who are expecting that this is a big part of their retirement income or just trying to get ahead with their family, it puts them under a lot of pressure. And then what that does also is it makes them less likely to go in and spend in the real economy. It hits consumer confidence. And not to mention those who are renting their home who have less cash when it goes up by an average of $67 a week, according to SQM. So either way you look at it, it's going to be a big hit.
But these aren't the rich. Let's just hit that on the head.
That's absolutely right.
Bill Shorten constantly, again, he said today, we're talking about people that are subsidised by the Morrison government to buy their sixth and seventh investment home. That is a tiny, tiny proportion of people. The bulk of people, I understand it, in the order of 70%, Minister, they have only one investment property.
That's correct. So the bulk, around 70% have one investment property, and around the same percentage are low and middle income earners. So we are not talking about mainly the wealthy taking advantage, and we are not talking about most people having 5 or 6
And we're talking about
properties.
unsophisticated investors. I have to say, I don't own shares. I have one investment property, and I went in there as a young person because I felt confident. I knew how do we invest in bricks and mortar? That's where most people, that's their entry point, isn't it?
Traditionally in Australia, housing has been a very good investment, and we would want it to continue to be a good investment. You don't help first home buyers by whacking the entire market, because it doesn't help anyone. Does a first home buyer really, and they have been getting back into the market, best in nearly a decade in the last 12 months, but would you want to buy in if you thought that the prices would continue to fall? Well, there's a policy that's designed to make those prices fall. So we think there's much better ways of assisting first home buyers, and it doesn't mean whacking their parents. It doesn't mean whacking them when they're renting, which is what Labor's policy does, and it certainly doesn't mean for people in the trades and in the construction industry putting their jobs under threat. And this policy does all three of those things.
Okay, we've got to go, but I want to ask you before we go about this idea that somehow franking credits are a gift. Bill Shorten used that adjective many, many times last week. I think it's upset a lot of self-funded retirees who've done the hard yards so that they're not on the pension, so that they are basically giving the taxpayer a gift, if I can use that term, not to be requiring support in their older age. But interestingly, there's a relationship with the unions and super funds and franking credits. Explain that for me.
Yeah, correct. So Bill Shorten would say it's a gift to the top end of town. Well, the first thing is the top end of town aren't hit. It's people on modest incomes. But secondly, he excludes unions and union super funds, industry super funds. So, for instance, unions don't pay tax. If they have investments in Australian shares, as many of them would, they can have a franking credit, and Bill Shorten would propose that they would keep that alleged gift. But if you're a self-funded retiree on about $40,000 a year and you've got a few $1,000s, he will take that money from you. He will happily take it from you. He will give it to the unions. He will give it to the industry super funds. So if he was fair income and he believed that this was a gift, he wouldn't have a policy of giving some of it to unions and others. He would treat everyone...
Who don't pay tax anyway.
Indeed. So he would treat everyone equally. But I think it is highly offensive to say to those who have saved for their retirement, this is an unwarranted gift. No, it's part of our tax system. It's a legitimate part of our tax system. And Bill Shorten is going after those on modest incomes. Those who are very wealthy, who have many, many millions in their retirement incomes, will not be affected by Bill Shorten's tax changes.
So, Seslja, thank you very much for your time. Good luck in the last few weeks, last few days, beg your pardon, of the campaign.
Thanks, Peter.